some questions, but Mark, I'd love for you to kick it off with your background, where you are today, and then let's just dive right in because we have 25 minutes. And I think
exactly. This is jam. I'll do my background mostly on the PLG experience, and then I'll give you like a 2-minute like PLG thoughts, and you can choose if you want to like respond to them or if you have other questions. That'd be awesome. And Breezy, just to confirm, obviously we're recording. Will this be promoted publicly?
Yeah, it will be, unless anything is shared that we will.
Yeah, okay. Just want to have that content.
Open.
Yeah, that'd be great. Absolutely. Okay, so so I've gone like a high-level operator turned academic/advisor board member turned VC with all the other stuff still happening. So like, did 15, 20 years of operating like you all. Last startup was Hubspot, part of the founding team. 4 of us at MIT started it in like 2006. I was the founding CRO and then took them to the IPO. Was recruited to HBS to teach where I wanted to rest for a little bit. And there was like a 5-year stint of full-time faculty experience there, where I also did a lot of like independent board seats and advisory gigs. Applicable companies here where people, I usually came in around the Series A when introduced from companies like Sequoia and General Catalyst, who are our investors at HubSpot. So I work with Asana, I work with Drift, I work with VTS, I work with Salsify, with Catalent, those types of companies. And then was approached by a gentleman at Bessemer to start the first VC fund running back by CROs, CMOs, and CCOs back in 2018. So we did that. We're on our 3rd fund at Stage 2 Capital. We have 300 CROs, CMOs, CEOs as our investors. We have most of the public SaaS ecosystem and the near public SaaS ecosystems, so like Zoom and Asana, Atlassian, and those types of companies who are our backers. And so obviously we've done, I think, 28 deals and love PLG companies. So do definitely look at a lot of those. So my PLG experience first was in HubSpot. Drew Houston was at MIT when we were, so we were all buddies. And we got super jealous when we launched our business, and 2 years later, he launched Dropbox, which it was PLG, but called freemium at the time. And Dharmesh was like, damn it, we have to copy that. And we couldn't in the marketing software for a variety of reasons why it's hard to move there. So we can certainly talk about that. But when we launched the CRM like 4 years later, we're like, finally, we have some white space to be able to do this. So we took a road trip to San Francisco, and Sequoia set us up with the leadership teams at the best PLG companies out there. So we spent like a lunch with like Atlassian and Dropbox and SurveyMonkey and DocuSign and just talked to them about how PLG worked, and then went back to HubSpot and built the CRM in that way. So I convinced Brian Belfort to move from San Francisco to Boston to join us, and he taught me everything about PLG at that time. He's the founder of Reforge, if you don't know him now, and like just amazing. And it's a great experience with the CRM. And then I went out and worked with companies like Asana and Drift during my advisor independent board member stuff to like work with that type of thing. And now on the investor side, I just love to continue to work with and look at those deals. I also at HBS in the last 2 years started a class on growth. So I have the head of growth in the class from Facebook, from LinkedIn, from Pinterest, from Shopify. I have Belfort come in, I have Sean Ellis come in, and it's just been amazing to be able to look at those growth teams from the inside and see the patterns. And that's what I'll kind of share with you today. Now, don't confuse, like those are consumer companies. Why are we talking them? We're B2B PLG companies. I think that is a big opportunity there. I think the way that growth is defined in the Valley in those companies, where it's the intersection of like product and go to market with a high experimentation, I think that's a huge opportunity for PLG to be inspired and really up level their the way they run. Okay, so that's why I'm kind of talking about these like Pinterest and that kind of stuff. And by the way, 2 things administratively, if you want to change your title of your name card to include your company and your role, that's always helpful to me. And also as you're talking, or even if you came in here with questions, just throw them in the chat and I can like just kind of think about it and look at them while I'm talking. So what did it come out of that whole experience, especially with like looking at all these other growth companies, is number one, I do believe that PLG, if we're on the startup ecosystem, there's 4 phases of North Star evolution that a PLG companies go through. The first phase is just finding a way to get enough users coming in every month to experiment with. And that's where paid ads are really useful. Phase 2 is working on the retention of those free users. So that next metric in phase 2 is like wow retention. Phase 3 is figuring out how to get those users in. Now that you figure out how to retain them for free, get them in for cheap. So now we move to CAC in phase 3. So that's where like virality and content marketing and influencer marketing kick in. And then phase 4 is monetization. So by the time you get to phase 4, you know that WOW retention is working, you know, CAC is working. Now can we get the LTV and get the pricing model work? So that's like the sequence that I see. And then in terms of like, how do we run through that sequence quickly? It's about rapid experimentation and in a data-driven sequence. And Belfour is really an inspiration for that. And there's a couple of things in there that I think we're screwing up in PLG. First off, I do believe that you have to bring product and go to market together, and you have to do that with a growth team that reports up the product. This is hugely controversial and not usually done in B2B companies. Everybody's like, no way, if marketing reports to product, they're gonna become product marketers. Yeah, that will happen if you don't split product into core product and growth. That's the key. That's what all these growth teams do, is they actually specialize the team. Core product works on the roadmap, growth works on the funnel. So there's a VP of product, and then there's like the growth and the core product. Now, if you're a seed funded company, these could represent fractions of people, right? It's like but like that's the general like vision. And then under growth, the growth side, you have like, you know, engineering, design, customer success, sales, marketing, you know, and a product manager. And in the beginning, again, that's 2 people with many hats. And over time, we can talk about how that evolves as the company grows. So that's one big opportunity that I feel like I'm not seeing in B2B as much, and we could exploit. Another opportunity is just how we fuel experimentation. You know, like having a weekly experiment review, having a bottoms-up creation of what experiments we should work on, having a documentation process of what, like literally like 10 minutes, write down what the experiment is. What is it? How are we going to do it? What's the hypothesis and what will happen? What is success? And then what happened? And what is our, what did we learn from it? Like it takes 5 or 10 minutes, and that's just so powerful. And 6 months later, when a new engineer joins your company, the first thing they do in the first 2 days is read all the experiment log. And they're like right up to speed with where everyone is. So there's like a little taste of the phases, the sequence, some of the opportunities, and I'll let you, you know, fire with questions. I can dive into any of that or anything else. I know like questions you had, Breezy, were like, how do you layer in BDRs and sales comp plans and pricing, and like whatever you want to talk about. Do you want me to facilitate, Breezy, or you want to?
Yes. Yeah. So I see Charlie, you had one. You want to just ask it live?
That'd be great if you can.
Yeah, let's go. Hi.
Hey, Charlie.
Mark, good to see you on here. Head of revenue.
Am I going the right pace for you, Charlie? I know you guys are founders. You don't want the like laid back smoking a cigar by the fire, a pipe by this fireplace.
Look, you've got your, don't you have a Torrey Pines?
Yeah, I'm in the golf mode right now. You want the pace,
last week, man. So I was.
Did you?
I'm writing that. Yeah.
North or south did you play?
South.
Nice.
South.
It's awesome.
Yeah.
Cool.
So I mean, I'm right there with that California vibe, man. We're cool.
Nice. Cool.
No, I'm a head of revenue for a startup, onboardflow.com. I'm interested in asking about layering in outbound sales activities and motions in a B2B product-led company. Like we're definitely, you know, a SaaS tool that's going to be used by subscription-based B2B type companies. And, you know, I think where I'm not struggling, but what I'm looking to define is how do I layer in some outbound activities that are going to maybe accelerate? I'm hoping will accelerate some things, but am I maybe kind of too early in this? Should I be looking for other types of product market fit or signals or some ARR benchmarks before I start layering that in? So
yeah, sure.
Hopefully
it's a great question.
That's aligned with this.
Yeah, we need to write more about that. I'm sure a bunch of you have this question too, because it can ruin it. It can ruin the PLG opportunity. And I'll back up and explain why that would be bad. I do think that PLG has a similar business model disruptive opportunity that SaaS was to the first 2 decades of a century. Like just look at the public markets. The on-prem companies have like just been completely disrupted by, so not completely, but like the growers are the SaaS companies. PLG has that opportunity in the next decade. It's not as pervasive. SaaS is applicable to almost every software category. PLG is not. Right. And I'm going to publish an article tomorrow on like where it's applicable and where it's not, in my perspective on how to figure that out. If it is applicable and you're going at PLG and you have a category where PLG works, and then you do your thing, Charlie, and overlay outbound so that these reps start getting hungry and they maybe get exposed to some of these PLG companies that are coming in, and they start calling on these companies without allowing the company to like marinate in the self onboarding process, you're going to kill PLG.
Yeah.
Okay. And and that would be bad because you'll be disrupted by your competitor who enables it. All right. Now, at the same time, I agree with you, Charlie. Like the sales team can accelerate your progress, your revenue, your growth, et cetera. Okay. So it depends how we use them. If we're really early and we're in, say, like phase 2 that I talked about, where we figured out a way to force like 100 users into this a month, and now the activation rate's not good, we can use an outbound sales function calling in, but it's much more like a product management CSM function, right? The worst thing we want to do is like have someone sign up to it and then move into an MQL inside sales motion. We're doing discovery, demos, and closing. That's not PLG, and we're going to ruin it.
Yeah.
But if they call them up and do discovery and don't do a demo, but actually say, oh, you're just trying to figure out how to like allow people to book a meeting in your calendar. Here's what you want to do. I'm going to give you control. Like, can you share your screen? Let me show you. Boom, boom, boom. There you are. You're set up. Do you see how that works? Cool.
Yeah.
I'll check in with you in a month.
See,
you know what I mean? Let them trip the wire.
That's actually really aligned with another thing with early stage, kind of leaders. I'm finding that I'm having to rewire my brain just a little bit for the type of person I'm looking for. Like, what's the the skill set, the background, even like, am I going to over index on something like empathy or, self-learning or even technical competence?
Yeah.
Like that might be a little bit different skill set versus
maybe
typical outbound hunter. I don't know.
I think you might be right. It also depends how you comp them and train them. Like, because at the end of the day, what I think the best salespeople there are awesome discoverers. They just do great discovery and empathize and align. And the difference is once they do discovery, we teach them to do a demo that's tailored to the needs, close the account, and then the CSM onboards them. The difference here is you do great discovery, same really hard concept, but don't do a tailored demo. Get them set up, show them how to use it, and then let them trip the natural wires of PLG. Okay, yeah. So an example like on how to operationalize this, Charlie, and this is another like thing that isn't used as much, but when you use it, it works amazing, is the comp plan. Okay, so reps are typically comped the most on first revenue from an account. This came out of the 1970s, right? Really hard to get in the door. Once you get in the door, really easy to expand because you have the relationship. That kills PLG, right? Because someone shows up and like, oh, this is great. Let me get 5 users on this and try it out. And if it works, I'll get the other 500 people to use it. But if a rep's comped on first revenue, and they're like, no, you got to do all 500 right now. Kills PLG. Okay. Yeah. So what I did in the HubSpot CRM was I comped them 20% more for the follow-on users. And so the reps were like, dude, Roberge is so stupid, man. Like I have a 100 seat account in the funnel and I'm going to sell 2 users this quarter. And then I'm going to do the other 98 next quarter. So I get paid. And I was like, dude, that's perfect. That's exactly what I want you to do. Because like you're going to get the 2 users really fast because it's freaking 2 users. It's like $10 a month, whatever. And then you're going to sell them in the right way because the money is when they upgrade. And by the way, if you screw up and lose those 2 users, I don't care. It's 2 users. Yeah. But if you oversell a 100 user account, it goes sideways. That's a big deal, right? So that's another tactical decision is the way you structure your comp plan. Do it by more on expansion. Yeah. Okay. Now, the last thing I'll say to you, Charlie, and we can move on to another one, Breezy, depending on what's out there. If you're overlaying, like you're trying to sell into like big accounts, like Fortune 1000 accounts, PLG still applies, but it's almost like a combination of PLG and ABM, ABS, right? If you sell into account-based marketing, account-based selling, okay, if you sell into a Fortune 1000 account, like there's 50 people that you need to influence. Like you can be calling on 50 different people. And if you're like a PLG company, that's great. You could have like 5 or 10 users in that account. So you can call in there and just understand what those users are probably not decision makers, but you can find out what's going on in the organization and then cold call the executives using that insider spy information to run what feels like more of an outbound sequence. Yeah. Okay. So like you can still use PLG to penetrate the Fortune 1000. Okay. What else do you want to talk about, Breezy?
Sure.
Yeah.
Thank you.
Yeah, you hit on one other question along the way, I think that was like tangentially related to what Esben was asking. So Vishal, I see, has a question, and I think I'm gonna like broaden the question a little bit, but how should companies be thinking about what they're offering in sort of these different self-serve versus enterprise and other tiers of their product? And how can, if there's not a lot of differentiation, how can that sale be done from kind of one tier to the next?
Right. Is that it, Vishal? Do you want to add to it?
No, Breezy's summary was a good one. I mean, in our world, the expansion comes from just more usage versus the access to deeper features in the enterprise beyond an SLA, beyond the ability for custom contracting. So it almost goes back to your topic earlier of how do you use sales to sort of be a steroid boost to PLG expansion, and then Breezy's broadening of the question is good as well.
Right. Okay. Yeah, I don't think we've done a lot of thinking. I've done some thinking here, and I'm not as like confident as I am in the more profound thinking around like moving marketing into products, splitting products into growth. Like I just know I've seen some people do it. It works really well. The comp plan, I've done it myself. I've seen it work really well. My thinking on the pricing is just be very careful about hindering the free use case. Okay, so like it's almost like I prefer to keep the pricing extremely attractive to the end user and really generate the revenue from the enterprise. Okay, so let me explain what I mean. Let's just take like a data and storage use case, like a Dropbox type thing, right? So it's like, okay, cool, Dropbox does an awesome job. You come in, it's free, you back up your device, that was awesome. And then, so what are we gonna base on? We're gonna base it on gigabytes. So the first gigabyte's free, and then after that you pay like whatever, $50 a gigabyte, right? That's cool, but it's the same thing as like someone can just undercut your gigabyte. You know what I mean? It's just like I charge $100, someone can come in, re-engineer my product and charge $50. Like what's my differentiation? Same thing, like I charge, it's free up to a gigabyte, and then someone could just reverse engineer my product and give 5 gigabytes. It's a race to the bottom. So could we, and this kind of Google kind of does this, is like with Google Drive, is like, can we give it all away for free and charge the enterprise for like enterprise grade features like integration with tech stack, SOX, like SOX compliance, and user admin? You know what I mean? That's a better model. Because if I'm like, okay, if one company is going to charge on the consumption of the free use case, and another company has unlimited of the free, and they're going to charge on the enterprise features, if I'm an end user, it's a no-brainer. I'm going for the unlimited free. So that means you're going to get most of the market. And now you walk into this enterprise and they're like, okay, which one should I buy? And you're like, I can either buy this one, which the enterprise features might be free, or I can buy this one, which half my company uses. And I have to pay like $5,000 a month. It's like, it's kind of a no-brainer. It's a switching cost. That falls in the switching cost barrier to entry. Is you've architected your pricing model to maximize the usage, to maximize the switching cost, and that way you've earned the right to charge a premium to the enterprise because they're going to have to force people to. So that's where my thinking is right now. Otherwise, they just have to, I don't know, like, I guess the other thing I don't want to do is I don't want to charge for what makes the product sticky. That's kind of I'm just trying to think through all like the 10 pricing cases that I went through in the last year. But hopefully that helps, Vishal. I don't feel like I've like crushed it yet, but hopefully that gives you some thinking.
No, thank you for expanding my thinking on that.
Yeah.
Awesome. This one, Jess, I don't know if you want to kind of come off and synthesize your question quickly. I think it's related in this topic.
It is a little bit. So we just started working with product-led growth at StockPress. So one of the things that we're struggling with right now is that our differentiator we thought was we were going to go after the middle market and kind of be this place for people who didn't have anywhere else to go. They were too big for a Dropbox or something like that, too large are too small to go to like a DAM platform. And that is true. And we're still getting that too, but we're finding that there's actually a lot of small businesses and startups that are coming to us and saying, hey, do you have a startup program, which we are starting now. But one of the things we're really struggling with, and something that a couple of people have suggested, is maybe going down and giving like a lower tier or even a free version. And one of the things I'm really worried about is one of our advisors had said to us that another digital asset management platform had done that in the past, and it kind of cannibalized their business.
Yes.
A lot of people were going, and I'm just really worried because I feel like there's this huge pool of people who now have heard of us and want to come try it, but we might be a little bit out of that price, out of their price range. And are we jumping the gun a little bit? Should we kind of hold, or is this our opportunity to kind of just get people?
You probably need, the short answer, you probably do need to do it. If you don't cannibalize yourself, someone else will. So if it's possible, then, we just don't, there's two things in here. One is like, and they're probably going to take the 5 minutes, but it's like, one is how to roll out PLG once you have an existing business, which is super complicated and very rarely done successfully. And then the other one is like this different price tier, and how do you get both the small business and the mid-market who have different budgets, and you can serve them both. So we'll take the latter first, and that is, and we'd have to dig into the uniqueness, but it's kind of like, what does the mid-market value that the small business doesn't need? Okay, that's kind of the answer to like how to get that price. We had a really creative one at HubSpot that in the marketing program, it was really weird and like a little hard to explain, but we got it, which was like, it turns out that we had really high churn in the small business segment, and the mid-market was less churn. And what we did was it sounds so like counterintuitive. We charged more if they wanted to run their website on a different platform besides HubSpot. So if they had WordPress and they didn't want to move, they had to buy the mid-market product for $1,000 a month. But if they were willing to move their website onto our content management system, we could charge them $200 a month. And it was it worked so well. Because the plumbers, they were like, yeah, I'm on WordPress. Like, I don't really want to move off, but like, I don't want to spend $1,000 a month either. So fine. If you're willing to move my website on a HubSpot system and I can get the $200 a month, I'll do it. And it was beautiful because all the plumbers stuck around, because that was what they needed, is the full all-in-one. Then we were talking to like a Series B software company, and like, no way, I've invested 1.5 years in my WordPress site or whatever. I'm not moving. And they're like, this is bullshit. I want to pay $200 a month and keep my website on WordPress. Like, sorry, if you don't move over, you have to pay $1,000 a month. And that was an example of something that the mid-market highly valued, was the API access into their existing content management system. Yeah, so it's very circumstantial use case, but that's the answer to it, okay? If you can figure that out. One of the things we did find out through that field trip we did across Silicon Valley like 8 years ago was all of those players, Atlassian, DocuSign, Dropbox, were all carrying a very small business segment that was losing money. And the reason they did it was protect from disruptors from coming below. So it's kind of like interesting that they were running that segment to lose money to protect the moneymaker business, okay? Now, the last thing is, so now you've gone along and you're $1 million, you're $2 million, you're $5 million, you're $10 million in revenue, and you're like, oh, damn, I should do PLG. And you got there through like enterprise selling, or you got there through inbound sales, MQL with an inside sales team. Super hard because of the cannibalization, Jess, right? It's like, yeah, I can see a PLG motion in here. I have an awesome product, and I can certainly give it to a small business for free and charge them $50 a month when they triple wire. But the 500 customers I have paying me $5 million aggregate a year, they're all going to downgrade, and my business is gone. This is why on-prem couldn't fend off SaaS, and this is why non-PLG companies will not be able to fend off PLG companies. Okay, so the only way to do it, and I have done this with some people, is, let's say you have 5-10 million in revenue, whatever. You have to find a very safe sandbox to figure out PLG in. Okay, so you have to siphon off like whatever, like some paid ad users over to this like group. Maybe it's 2 engineers with a product manager, designer, and a CSM. That's your team, and you filter them off, and it's going to take them like 3 months, 6 months, whatever, to get the PLG motion going. And then you have to raise money and before you tell anyone, put money in the bank and then cannibalize yourself. And your revenue is going to look like this, right? Inside sales, MQL, little PLG experiment, you raise money. Now you open up the PLG experiment, your revenue goes down. Your revenue drop like 25% maybe, but you tell the story to the investor, you say it's going to go down and you cannibalize yourself and then you shoot back up as a PLG company. But you have to create that safe little sandbox to not disrupt and figure it out, okay?
Thank you.
And you, again, if your category is open to PLG, you have to do it because someone else is going to do it to you. All right, Breezy, I know we all have meetings.
Yeah,
Oh,
this was
can I say one
awesome.
thing too? Like,
Yeah,
so
go
yeah,
for
we
it.
at stage 2, we launched our accelerator last week. So we have a go-to-market accelerator, think Y Combinator, but for go-to-market. So you're tens of thousands or 100,000 in ARR, 10-week course, how to hire your first salesperson, how to generate demand through PLG, through content marketing, through cold calling, how do you write your first sales playbook, how do you do your pricing model? You know, again, we try to take all the thought leadership of our great SaaS executives and investors and pull them into this thing. So if you go to our website and just click on the accelerator tab, you'll see all the information there.
Awesome.
Cool.
Thanks, Mark. I'm going to probably maybe pull you over into our Slack Connect group too, if you're open to it. I
Okay.
think maybe a couple questions and hopefully
Cool.
get some insights in reverse too. So
Awesome.
Thanks again for coming on. Thanks everybody, all the questions, and we'll follow up over email and everybody's connecting on LinkedIn. So looks great.
Good luck,
Have a good one.
everyone. Take care.
Appreciate it.
Thank you.
Thank you, Mark.
Bye.